And of course, the opposite happened to the stocks. We saw a drop for stocks. So pretty clear flight to safety, as I was mentioning in the introduction to the video. This is suddenly a flight to safety. Stocks gap down, interest rates plummet, by extension bonds rallied. However, we can look at another measure that I like to look at, and this is again another intermarket or between markets analysis point. We can look at J&K, high yield bonds. So high yield bonds normally move together in lockstep with stocks. So for example, on this chart, I'm showing you the high yield bonds, and on the bottom here we see a correlation coefficient, correlation to the S&P 500. Correlations of high yield bonds to the S&P 500 are very high. Of late they've been 90%. So 90% of the times stocks and high yield bonds are doing the same thing. So notice on this chart, whereas stocks actually gapped down and continued lower in a collapse-like manner from yesterday, high yield bonds barely budged. Nothing really happened, I mean, they moved a little bit, but nothing as dramatic. So this to me looks like we are gonna see some pullback for stocks. I think again it is almost a guarantee that this green line 6,160 will get tested, but that might be it. I think that could be it. We might just try to bottom here and attempt a new records for S&P 500. Unless, of course, something again, changes next week or so, and high yield bonds also come under pressure. But for now, I don't see much contagion, so to speak. And so this was maybe like a knee-jerk reaction to the tariffs implementation, where stocks dropping and interest rates rising. Let's see what happens.